Do you like gambling? More specifically, do you like sports gambling? Then you might want to hear about this because there is a company that holds 50% of the global market share for sports data, including exclusive partnerships with 3 of the largest sports leagues in the US, partnering with half of the Mag 7 and all of the biggest gambling operators. And yet the stock is down 60% from its highs. Short sellers are ringing the alarm bells. It's a very conflicting story, and it's about SportRadar that as of late has sunk with the rest of the software sector. Basically, what SportRadar does is that they hire independent journalists to each game that you could think of. The journalists are armed with a tablet, and with that tablet, they record every metric that they can about that game and transmit it back to HQ up to 2 seconds faster than what you can do by just simply staying at home and watching on your TV. SportRadar at HQ then packages all that information and distributes it to, well, all the above. Gambling websites use them for their odds, entertainment for their broadcasts, and sports organizations use them to maintain integrity in their games by flagging suspicious trades and movements on the court. They have over 2,000 clients with an average contract length of about 6 years, making their revenue very predictable and their business highly profitable. In terms of competition, it's sort of kind of like a duopoly. There used to be 3 players, but now there's only 2 because the third one was bought out by SportRadar, bringing the MLS and the PGA under their collection of exclusive leagues that they have a hold on. The only other real player in this space is Sports Genius, who holds the rights to the NFL and the British Premier League. If they really wanted to compete, first they would have to wait until the contracts that SportRadar have in place expire. And once they expire, they have to show that they are proficient in being able to take down the data and transmit it like SportRadar in sports that they have no experience in. And let's say the infrastructure was even just completely equal. It sometimes doesn't even matter because there's leagues like the NBA and the MLB that not only are partnered exclusively through these long-term contracts, but are actually equity holders. So it's within their best interest to just keep renewing the license so that their equity improves within this company, making sports like basketball and baseball just out of reach. Because if you are the baseball league in Japan, for example, why would you not go with the MLB software and take a risk on a third party that doesn't have any experience, at least not with major leagues? So for a third party competitor to come out of nowhere and trying to sweep some clientele whenever these contracts do come into play, it's almost impossible, at least for the crown jewels. And if we actually look at SportRadar's product, it's not that they're the only company, it's that they're a really good company too. The average client that stays in SportRadar on average spends 20% more every single year. It's stacked, it's stacked, it's stacked. What is going on? It's AI. It's AI. Because if DraftKings or FanDuel decide to internalize their own odds, selling the raw data is far less profitable than selling a finished polished package through their in-house business of predict and make odds for these companies. And also in theory, AI gets good enough, why can't we just rig up a couple of cameras, put a program on them, and just have them run all the information that we're paying journalists for? And in fact, SportRadar is actually already doing that. But if the barrier to entry is lowered so much, then why don't other companies like the leagues just do that themselves and then sell directly to the gambling companies? Currently, SportRadar is the only option, but when they're not the only option, they'll have to compete on price instead of just being the only price. Oh, excuse me. This year alone, the company is saying that they're going to spend up to $300 million in capex, with $50 million specifically going to improving their AI models that they're already using to great success. One of the great successes that have come investing in this AI infrastructure has been their micro markets. Like, what is the next point going to be made? Is it going to be a free throw? Is it going to be a three-pointer? Is it going to be from the corner? How many passes are going to occur? That kind of thing. Like, they are already using these models to create a new product for these companies. It's their head start combined with innovations like these that keep SportRadar at the top of this sports information market. Also, they might be involved in human trafficking. Okay, hold on, not them. It was like a client, but not this report essentially alleged that up to 40 and on the high side, maybe even 60% of the actual revenue coming into SportRadar is going to be coming in from illegal websites, unmonitored and unchecked. And some of these websites have even been linked to human trafficking. A lot of this is hedged on something called a client number. And what Muddy Waters essentially said is that many of these websites had official client numbers from SportRadar, which means that SportRadar SportRadar knew who these clients were. But on the earnings call, they essentially said, when we hand that information to our partners, some partners appear to be taking that information and then giving it to more shady deals. It's the partners you need to be investigating. And these partners are all independently verified by several gaming commissions in their local provinces. And so if you have an illegal gambling website in Malaysia, then you need to be looking at the Malaysian team or league that we've partnered with and see who is the bad actor in that organization, who is then taking the information we're giving them cleanly and then also distributing it to these bad actors. And honestly, that's kind of a good explanation. But also, overall, that makes forward guidance pretty negative. Because what if these teams and organizations are clean, but they are essentially running a middleman service? If these bad actors are sniffed out, exposed, and then they have to shut down their legal businesses, and so the money from the illegal businesses is not going to the legitimate businesses that then go out and buy the information from SportRadar. That's pretty bad, because then SportRadar, either way, might have been doing clean business. However, in the future, they won't be benefiting from the trickle-down effects of dark market sports gambling. The real question of all of this really just boils down to, does the company that holds a 50% market share of global sports information, including 80% of global soccer through their 150 partnerships through federations, and FIFA, the world organizer, not to mention their avenues in baseball, tennis, golf, even stupid ass ping pong? They send people out for ping pong for the gambling companies. SportRadar makes the odds. The company themselves is incentivized to have a layer of protection, because what if something goes wrong? And if you look at the broadcast, why would they internalize their data analysis if they can just get SportRadar to do it for them and they can focus on the entertainment value of their broadcast? And if you're a sports league and you want to monitor the integrity of your games, who are you going to go to other than the guys that make the odds for the gambling companies? If I had to take all of that in consideration and predict where this company could be, at worst stagnation, at best meaningful innovation, adoption of AI, even if that means they'll have to fight more on pricing power if a third-party competitor can come in and maybe do the same stuff that they're doing. Their API is integrated into certain websites, and trying to swap APIs is like swapping your front tire while you're driving. It's just not gonna happen. And when you're the gold standard in something, that has to mean something. I picked up shares. I think at least in the near term I could see it going up. I just know that this company is not going out of business. They're too healthy, they're too profitable, they're too revenue growing. It's just not one that you should count out. But I don't know, you let me know what you think. Obviously do your own research. I'm just presenting this information because I find it very interesting. But yeah, thank you very much. Subscribe and not. Okay, bye.